All right, good morning, traders, and welcome to the live trading webinar with Scott Pulcini. He does this every Thursday. Last Thursday he was away, so welcome back, Scott. And it'll be live analysis and trading from a professional here at Futures. Thursday he was away, you guys so understand what the welcome back gig is here. So let's go through. You guys know who Scott is. I have his contact information. He does offer mentoring and educational services, so you can reach out to him. I'll put this into the chat for you. And then one more thing was the risk disclosures. I need to go through those. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, with all of that said, let's turn it over to Scott, and let me get up his screen here. If you can start sharing, Scott, and I will rebroadcast that.
All right.
And welcome back.
Thank you. I think this is the right screen. Let's see. You got my ES screen?
Yeah. Yeah, I think we're all good.
Okay. All right. So I was having mic problems. There was some big ice firing off here in ES, sell ice. This is the same area where a lot of sell ice fired off on Monday, and it ripped higher, and now we're back here, and now it's firing off again. So you can see it's 1300 here, and there's some smaller 62, 289. That was a little bit below here. I'm not going to draw that. I'm just going to use this bigger zone here because this was the most concentrated volume. I mean, technically, I guess you could. My threshold 700 for ICE and ES. This is close to 700 if you want to make this a little bigger. I'll just keep this zone as it is, though. So bigger picture stuff. Yesterday, we basically had a failed breakout of a smaller balance area. So this was looking short-term bearish. We caught a short in my trade room yesterday at the close. You see here, we did this, got through this high volume node, and then sold down to here, and then kind of bounced into the close. But you'll see where we bounced, but we're back down in the same area right now.
I'm sorry, Scott. We're looking at your. It looks like your soybeans. Or I'm sorry. This. Yeah. Is the Z?
So that was the wrong screen.
ZS. Yeah.
Hold on. Let's try this again.
There we go.
You got ES now?
There's the ES. Yeah.
All right. Okay. So what I was saying here was.
Never mind.
Are you on my Thinkorswim chart?
Yeah, we see that now.
Okay. A lot of technical difficulties today. All right, so this was the balance I was talking about. We tried to break out of that, and then we failed to this high volume node. We actually caught this short yesterday at the close, and then it kind of bounced, and we're here again. And then you see the sell ice coming in right around here. So the area that we're bouncing, or we bounced from yesterday, was right at the magical Ludwig level. We call them lugs in my room. You can see here. So we got short from up here, rode it to here. I got out. I actually tried another short, smaller short, to see if we can come back, and we bounced off of this and rallied into the close. But now we're back in this area again. So if this holds, if this iceberg, sell ice, we get above there, I will take it along aggressively above there. My rule of thumb is if we're below the yellow lug, I only take longs conservatively, meaning if there was there's a nice zone like we see here, I wait for a full ATR retest failure, then I would go long. But we're at the blue lug, I will take longs aggressively because I know how powerful these areas are. So that's the first step to understand where we're at there. So you can see we're basically just hovering in the middle of the zone. So if we get out of here, the next step is to see what the ATR is, average true range for 5 minutes. 5.22 is the average true range. So I plug that in and I take 80% of that, 4.17, so 4.25 points out of here, I will go long. So this is an aggressive entry again. It would be 88.5. I'm getting all that feedback too, Bruce, with people coming in the room. I don't know if you can change that or not.
Okay, we'll take a look here.
Good. So if if this rips up here, I'll take this aggressively. We are at the blue lug, so I need to see. I'm not going to short this aggressively because I need to see new lugs form, and then I'll, if we say we break down a little bit, we form new lugs, and we get a retest failure, then I'll go short. So it's either aggressive long off the blue lug, or I'll wait for a full ATR retest failure. As long as we have new lugs, right? So if this just sits here and we don't draw new lugs, Ludwig levels, I won't short this right here. Another important area you can see, I'm trying to get in this composite, market profile composite. This was from, I believe, January, but it's been respecting it. Let's see here. Yeah, January 18th, this is multi-day, as you can see here. Three-day market profile composite. So then I draw that zone, and you can see it's still relevant. Right, so this was, I believe, Monday. Get inside here, closed up here. Actually, that was Tuesday. Came down here, tried to get in yesterday, rejected it, and now we're right back again. So if this accepts in here, if this ice holds, the sell ice, which would be a Titanic setup, one of my 6 setups, then you expect minimum bottom of this. The tendency for these markets, once they get into composite, they will go to the other side. So this is a pretty important level. It's either going to bounce again or it's going to accept, and we're going to get a sell-off. So I'm leaning towards sell-off, especially after, this is why you want to know what the bigger picture stuff is. I know we're day traders, but you want to know, hey, what am I leaning towards here? Does this look bullish or bearish? Well, like I said, we had a failed breakout of this little balance area from Monday. So that's not bullish, right? So I'm expecting, and there's really not a lot of structure until you get down to these areas, right? So I'm expecting that move, so that's my thesis. I will adjust if the real-time volume tells me something different, but as of right now, it looks like we're headed lower. Again, I have my thesis, but I also have my rules. I won't just short this aggressively until we have new lugs, because again, you see how powerful those Ludwig levels are. So until we can draw new lugs, I'm not going to take that short. So we got to see how this unfolds here. Russell's also firing off. I think I missed a trade here. So my thresholds in Russell are 150. You can see 153. Let's just draw this in case we get a retest. I would be willing to bet I missed a trade here. So the way you do this, again, there's always confusion how you draw these zones, right? Here's the spike down here. You get your crosshair going, and all you do is incorporate all the prices that were in that spike, right? So it started here, right? But we did go lower over here. That's still within this spike down here. So you want to make sure you get all those prices in there, right? Right there is the bottom. And then up here is the top. And that was sell ice as well. So you had sell ice in both ES and RTY. And so that's that. ATR in here is, you can see it right here in the middle, 39, so 40 ticks. I don't think we got 40 ticks above here. We did not. We only got about 17 ticks above there, and we've definitely gotten 40 ticks below here, right? So depending on what the lugs were, I may have, we'll look at it here. I didn't get a chance to look at it because I was having those technical difficulties, but I could have shorted 80% of the 5-minute ATR, which would have been 32 ticks. I could have been in immediately here. Stop goes 80% there. And I would have caught this move, and I'm pretty sure I would have been in this. Let's take a look. Absolutely. So this is where I will get in aggressively on shorts, right? We are below the yellow lug. Get a different color here. Right? We had that sell ice up here. I would have definitely taken that short aggressively. So I'm basically missed it. I may get lucky and get a retest fail. I'll still take a short off of that zone, but I would have already been in there if I was not messing around with Discord. So I left this like this as well. You can see, actually this is wrong. I had to, every time I switch I'm on mountain time, and when I switch for daylight savings, it screws up all my market profiles. Let's, all right, that looks better there. This can actually merge. So this was the last 2 days. This was yesterday. We couldn't quite get down here. We're just hovering right here. So with the market profile, there's questions on this as well. You know, what you want to do. I just use it in a very basic sense. If this is the daily value area for the day, meaning where 70% of the trade occurred, right? And if it overlaps the prior day by at least 50%, I will merge the two, and then you get your composite, and that's what the blue zones are. And composites are very, very powerful areas to be trading off of, especially when you can, overlay the real-time volume. You have an extreme edge just with that alone. So you can see here, we opened up, tried to get inside there, and now we're just hovering in between here. So again, if I get a retest, that ice came in basically right here. So if I get a retest, I'll short that, and I'll like that short. For some reason, if it gets above there and we accept back in this one, then you expect it to get to the other side. Bigger picture. You can see this. I was showing this yesterday in the room on a daily. You can see how incredibly structured for how squirrely this market is. I mean, you can see the structure here. This is a daily, remember, so this is months and months and months of balance, right? Balance areas, again, are just traders placing bets. Tried to break out. This is one of my favorite trades. That's a failed breakout. You know it's a failed breakout once it gets through the high volume node of a balance area. High volume node is where the most trade occurs it's an area. It's not an exact price point, right? So we got through there. Then we tried to build more balance, tried to hold its head up. Then we had another failed breakout. And then we came down here. We built balance for a few months now here. Now we try to break out, and you see where it stalled. The bottom of this and the bottom of this. Right? So now it's stalling. So who's going to win out here? The longs or the shorts? So this is still technically short-term, intermediate-term bullish, but it's still long-term bearish. So depending on what happens here, if this just fails here and then gets through this, we're going to have yet another failed breakout. If this can get through this area and this area, then we're probably going all-time highs. So if you're just looking at this in a vacuum, when markets break out, many times they'll retest the top of balance and go, or high volume node and go, and it's still a bullish scenario, right? So all we're really doing is pulling back to the top of this multi-month balance. So shorter term, this still looks bullish, right? So again, you want to just keep this stuff in mind. Then you have another little balance here too. You want to just keep this stuff in mind when you're taking your trades, because it doesn't mean you can't get counter moves, but your bigger trade is going to probably be right now the long side, right? I mean, we still have this, but I'm just talking about this. You're still probably, if this gets rolling, this is probably coming to this high volume now. If we move down, it's gonna hit some friction trying to sell off, because all the guys that were shorting these longer term traders, once you do that, they're like, oh no, we're wrong. As it comes back to this area, that's where they cover, right? So that's where you get the retest failures. And so that's why it's a lot of times hard for this to continue to sell off, because all the guys that were caught are trying to cover. But once you get to this high volume node, then it's go time, like we did here and like we did here. So
NQ stop by NQ 156 contracts.
So my point is, it still looks pretty bullish. Doesn't mean it won't take the short, but just keep that in mind. If we get inside this market profile, you probably can expect to move all the way to the top. We're in between right now. All right, let's see what's going on in NASDAQ. So you heard that stop run. It's 142. You know, I like seeing closer to 200, but there's been absolutely nothing in here today. My bare minimum is usually 150. This is 142. It's close enough. We can draw this zone just because there's absolutely nothing going down in this market yet. So once again, incorporate all your prices. I like to make my stop zones yellow or white or orange, whatever color that is. I think it's yellow. Would make it orange, but it looks too much like the liquidity. That's why I make it yellow. All right, so that's that. That's step one. Step two, ATR is 28.24. So we know that for stops and entries. 80% of that is 22.72. So I round up, so 23 points. Then we go to our lugs. So short wise, I will take, so here's your zone that just fired off, right? On the other screen, I just showed you on Bookmap. I will take shorts aggressively, meaning 80% of an ATR, which is 23 points. I will take that aggressively. To go long, because we're below the yellow lug, I need to see full ATR retest failure, and then I'll go long. Right? And you can see what just happened here. This was a few days ago. We closed right at the top of this, gapped up out of it. And then yesterday came down, came close to testing it, closed here. Today, try to get inside, back outside here. So from a market profile standpoint, this is looking like we may do this again because it's not accepting in here. Remember, you want to see it accept. If it accepts in here, then you expect the other side. This thing instantly rejected. So this is looking like we may get a rally. I will go long, even below the yellow lug, but I need to see a full ATR retest. Right, so we need to see it's 28.4, so we need to see 28 and a half points above here. Retest failure, I'll go long. 80% of an ATR, 23 points. My stop will go 23 points below there. And then what I'll do is I'll use the lugs as targets. Right? So if I get long that, we get rolling, I will watch yellow lug and baby lug, call it baby lug in the rooms, and that's going to be confluent with extreme standard deviation of VWAP as well. So these are good areas to be piecing out of the trade. I'll try to hold one. As long as there's no volume signal, counter volume signal on the SI indicator, I'll hold at least one and try to make it up to the red lug. So we'll see how that plays out. Neglecting we're still in the middle of this zone. So remember, I'm taking this aggressively out of here because we're at the blue lug NES. Let's see if we retested that Russell. Not yet. So again, I should be short. I would have been short this market.
Sells EW 151 contracts.
All right. Any questions, Bruce, on that stuff? Check out wheat.
No, not yet.
Okay. So you see the size coming in here. For soybeans, I like closer to 200. Wheat, you can use 150. This is, you can see it's still coming in, but this is adequate to draw a zone on. So you can see where they tried to buy this aggressively. That's what the bubbles are showing you, the market orders, and they ran into a mouthful of sell ice and then an instant rejection. So they can't be real happy about that. That's that. We'll make it. That. Did I get all the prices on that one? All right. So that's step one. Wheat ATR is 4.5. You can see right there in the middle of my screen, or middle of this box, 4.52. 80% is 3.61, so 3 3/4 points would be an 80% of an ATR. And then we check our lugs. You can see we're right at the red lug, so I will take shorts aggressively. Let's see if there's new lugs here. Come on. Doubt there's new lugs, but I'm trying to refresh this thing because I didn't restart my Sarah chart. I don't know why this is not refreshing. So if you guys watch that video, we've talked about this multiple weeks. I posted it. It's been posted many times. If you guys don't have it, someone can post it. I had a one-on-one with Pamela Ludwig. She's the developer of these. She's been around for like 11, 12 years. Many loyal followers, because you'll see she's got a free day trial. Get on there, say you saw it on Bookmap, and you'll get some perks. But get on and at least watch these things. You'll be shocked at how well they work. Like, guys in my room all the time are like, I want to marry her and stuff like that. That's how powerful they are. But one of the things we talked about on that webinar is when a market moves above or below the red or blue lug, which are the major lugs, and it instantly rejects it, that's a sign that that's going to happen, right? Because it didn't have all the qualifications to draw new lugs, kind of like we did here. So that is a good sign that this is going to fail, right? So you just keep that in mind. But I because we're at the red lug and we're failing back under it, I will take this short in wheat aggressively, right, out of this zone. So we're still in the middle of the zone. So what's aggressively? 80% of an ATR. ATR is 4.52. 3.61 is 80%. Round up to 3 3/4 because it obviously doesn't trade in decimals. So I will go short at 33/4. Be 80% of an ATR there. So let's see, that's 7.5 points in risk, because if I get filled, I have to risk 80% of an ATR above the zone, right? And the size of the zone is another 5 points. So that's 12.5 points of risk. So then you look at your risk calculator, and it's the same values as tick size as ES. So you can just use the ES. What did I just say? 15.5 points. Yeah, so I could put on a 3 lot. Right? So this is, guys in my room get this. There's a couple different versions. You put in what your account size is and what you want to risk per trade, and then it tells you the size that you should be trading. This is the number one thing you should be using before anything else, because if you're trading too big for your account, you will eventually blow out your account, without a doubt. You might get lucky for a while, but you will blow it out. I'm going to try my best not to go on those rants today, because I've said it about 4,000 times on these webinars. All right, so we got that ready to go. This is the trade I missed. Of course, it's working perfectly. And then we're still in the zone in ES. And then NASDAQ, did we get an ATR below here? Yes. All right, so I'm trying to remember what we said here. I don't know what I'm doing here. I should have been short this market. Didn't I say I was getting in aggressively below the yellow lug? So 28.61 is ATR. 23 points I was supposed to be short. Actually, I'm okay now. So that puts me at basically 08. So I should have been filled there, but I'll put this in now as a short if it comes back there. I'm trading. All right. So again, I'm going short this stop run on, because we're below the yellow lug. I'll go aggressively short, right? And then if this starts rolling back down, I'll watch the blue lug. This is interesting. This looked like it was going to reject it. Now we're right back in it. So the next move down here is probably going to accept, and you can probably expect that. So we'll see. I get filled there. All right, so filled on that. So stop now goes 23 points above here, 80% of minute, 5-minute ATR, puts me at 77.50. Natural gas numbers coming out here in a minute too, 77.50. All right, short that. I should already be short Russell. We call it Russell. There's my patent filled to almost the tick. So we'll let this work and see what happens. So say this comes up. Do we get full ATR below here? What did I say? 29. Yeah. So say for instance, there was some confusion on this in the room the other day, right? So say this comes up. We did get a full ATR below here, right? So that disqualifies this as a long setup now. So say this does come up, stop me out, and say we got a retest failure of this zone, I would not take that long because this is how I trade these, right? If it gets a full 5-minute ATR above or below, it disqualifies it as a trade the other way, right? So I would not take it long off the zone now. I'd have to see something new to take along. So all I could take on this is shorts, right? Because we got the full ATR below there. All right, so we got that working. Still waiting to get out of the zone in the S. Possibility of dueling positions on here if I get filled on this long. That's about it. Not a lot going on right now. Any questions, Bruce? Still waiting to get filled on wheat as well.
Yeah, just a request to look at gold.
Yeah, actually I'm long gold right now. I got long before the open. It's just bouncing around as usual. So this was pre-market. It had almost 400 stops. That's this yellow zone. And then we had, let's take a look at the lugs. We're above the yellow lug, right? That was bullish number 2. And then this was today. So to see yesterday, like you can form like a story in your trading, right? So you see yesterday's trade, I spread this out, right? Came down, we opened up right here, tried to get outside this guy, no, got back inside, other side, right? Closed right here. This morning, came down, tested right where the point of control is, that's where the most trade occurred in the composite. Came up here, launched out of here, and now we're sitting here. So expectations I should say, that we at least get to this, and you want to see if it rejects, or if we get inside here, then you can expect to move to the other side. So this is looking bullish here, here. Bigger picture stuff. I mean, this market's just throwing me for a loop the way it's been trading lately. I mean, you had this bounce here. Well, first of all, you had a fail breakdown here, right? See that instant rejection, see the buying tail. Then we built balance over many days. Then we tried to break out. Then we built more balance. This should have done that. Instead, we come down, we violate the high volume node. Looks like it's going to 0. Then we bounce the exact same spot that we did over here, right? And then we built balance over the last 2 days, and now we're breaking out of that balance. So this looks like it's going to motor up here now. This is an important area you want to watch. Why? This is directional conviction. Those are very important. One of the 4 important areas of charting where big moves start from, right? You can see that red bar started right there and led to this eventual huge down move. 1960 down to 1800, 1900. So that's like 600-700 tick move, right? $70 move. So if we do start rolling up, you want to keep a close eye on this to possibly take some profits. 1958, right? And that would be right around here. That'd be real close to this, the point of control of this composite. So, if we do get in here, so say I'm already long and we get inside here, say this accepts in here, start rolling, well, you definitely want to watch this area to get out of. You know, it doesn't mean you have to get out of all of them because you expect at least this. This is all barring new setups, the volume setups in the opposite direction, right? Say nothing happens, you just hold this thing. The scenario you'd want to watch because that's where that directional conviction started, and then you want to watch the top of this, and also the red lug, which is going to come first. So I personally I'll get out at the lugs, just like I showed you earlier, because they're so powerful, right? So I'll get out, and then I'll wait for new ones to form, and then you'll most likely get a new volume set up, and you can get back in, right? So that's how I trade those. But you know, this is only, you can see where this red lug is. It's right at the bottom of this composite, right? So that's not a bad place to get out and then wait to see if we can accept into this, and then build new lugs. So all that, and I've been long for an hour and a half waiting. So that's gold. Looks like I may get stopped out of this. So basically, if I get stopped out of this, I'm going to be long ES. So I'm already close to being long ES right here. All right, filled on that. All right, so now in here, my stop's going to go 80% of an ATR below this zone here. So 78 is the low.
Nat gas iceberg sell NG, 156 contracts.
5.55 is ATR, so 4.44 is 80%, 4.5 points. So that puts me at 73.50 as my stop. So I may have too many on here. Let's see. That's right. I'm risking basically 15 points on this trade. And we just looked at that in wheat, so we know, because it's the same tick value, we know 15 points is a 3 lot. Right? Right there. Once again, the mighty lugs hold. So we're at VWAP now. If we can get rolling, then this will be my target. This will be my first target. Yellow lug at extreme standard deviation of VWAP. That would be +2 standard deviation. That's a real good place to get out of some, if not all. And once again, you see this is rejecting. So let's actually merge these last 2 days, because this is a composite as well, right? Because these 2 days overlapped the value areas. And you can see now it's like a dual composite. So we're going to accept back in this. This is the most recent. This is today's trade, obviously. We can accept back in here. If we do, you expect the other side. This gets in here, and you expect the other side. Pretty important level. Let's take a look at our internals, just to get an idea what's going on here. You can see pretty choppy on the tick, NYSE tick. You know, plus minus 500, plus 500. There's been no extremes, right? When you don't see extremes, you're usually going to get some choppiness. There's the VIX. Basically just chopping around. ADD is pretty benign, plus 349. And then this is your synthetic market with all the these are the FANG stocks. These are the most weighted stocks in both S&P and NASDAQ, right? So this stuff trades exactly the same as regular markets as far as, here's your balance. We're trying to break out of that balance. Overnight, you had a failed break out of this, built balance below this. Now so if we can get back above this high volume node on this, then we're probably coming back to this stuff. Right? So, overall, though, it doesn't look, nothing's really standing out to me. But we got the signals on the volume, and that's what we're trading. I get stopped out of NQ. No, and I forgot to bring over my waterboarding here. So this is tick strike. This is basically It's like a audio alert that lets me know. It's an algorithm that is based on the speed of the orders coming in and the size of the orders coming in, and it ranks from 1 to 15, right? So I have all these set at 11, so I don't even get a signal on them unless they're 11 or higher. And these are just all the highest weighted stocks in both the NQ and ES. So when these are firing off 11 or higher, I know there's going to be probably something to the move, right? And you can use this to help yourself get out as well. So if we come to important areas, say it's like a point of control or market profile composite high or wherever, and none of these are firing off, you may want to get out of some, right? Because these are the drivers of the indices which the futures are based off of, derived from, aka derivative. All right, so just waiting. Short that, long that, both in my face right now. Any other questions, Bruce?
Some questions here about the Ludwig levels and that Pamela offers different logs for currencies. Have you looked at some of those?
Say that again. She offers different logs.
Lugs, I guess. Not it says
Oh,
logs,
logs.
but I guess lugs for for yeah, for the currencies, futures currencies.
Yeah, Well, what's the question? She has them for almost everything.
Oh, she does. Okay.
I don't know.
Okay.
Yeah. So go to her website, and again, we can look at it right here. It's from 1982, and I tell her that all the time, and she says it works. Oh, yeah, she's right. You go in here. Here's her products. If if you have one that you want, you may build it if she gets enough requests. But I mean, these are all the major ones. It's actually even more than this now. I mean, I have them. You can see mine. I have them for basically every product that you'd want to trade. You know, but like say you want soybean meal, she may do it, and I think she's working on individual stocks as well. So you just go in here and then do the free day trial, put your name, all this stuff in the comments. Say you saw it on the Bookmap webinar, and then hit submit, and you get a free 3-day trial to check them out. But I can tell you, they're again the most powerful things I've seen in trading are number one, Bookmap volume SI indicator, by far runaway, right? These are number two. This and obviously market profile composites are pretty much tied for number two. But these are way a lot more useful for day trading, right? Like, yeah, you can see the composites, but so say for instance you want to get short here. Okay, I'm going to get short right here. Well, where's your stop going to be? Like up here, right? Or you're going to get long. Well, where's your stop going to be? Down below the composite. So these are good to know the areas, but these are awesome for day trading. This and then the real time volume, right? This is the real time volume is what drives the markets. I don't know if you guys ever heard me say that. Because that's you can have all the lines on that you want on your charts. Doesn't matter. I mean, they only matter if the big money is playing at those areas, right? Or the dumb money is wrong at those areas, which is our stop runs.
Yeah, I mean, just to reiterate that point, Scott, is so good to hear. I mean, it really, I mean, like in the advanced webinars that we have, 3 days a week, it's or in other traders as well. It's always the order flow is the thing that makes the levels. But you want to look at your higher time frame levels, and then you want to look at the order flow around them. But it is the order flow and the volume and the order book that actually make the levels. So insight to that is the first thing to understand, and how to integrate that with your higher time frame levels from the past.
Right, exactly. I mean, again, it doesn't matter what you're looking at. You want real time volume to be agreeing with and understand the how to these zones, and and understand what the big money is trying to do, and if they're right, if they're wrong. So I'm obviously short here in wheat.
I have a question for you, Scott, regarding account management. And so you're putting on risk in multiple positions here. Um, so how are you are you managing? You have three here. You have three on the ES or um, you know whatever it might be. Well, how much do you, if you're hedging, do you consider it differently? The account management, not the individual risk management for the trade.
Yeah, I mean, if I have multiple positions on the same way, I mean, you got to be very careful if your markets are correlated, right? Like, you don't want to have, you could, but you just got to be careful of having, short ES, short NASDAQ, short crude. Crude's been moving opposite lately, but you know what I mean? Like, yeah, you have to keep an eye on that, especially, I mean, most of the times your trading firm is going to keep an eye on it for you, right? So it's like you won't even be able to put on, if you hit your margin, know, in your account, you're not going to be able to put on multiple positions in multiple accounts. So, yeah, I'm aware of that. I mean, I try not to have, so say there's three, say there was a setup in NQ, ES, RTY. They're so correlated. You just want to be careful being long all three. Um, but that being said, you're using these areas which helps you control your risk, right? So it's like, yeah, you could be long all three, and where you're wrong, right? So it's not like you're risking huge amounts on, I have different zones for different markets based on what comes in. So you can still do it, but you just got to be aware if you do it, they're pretty much all tied together, right? I mean, if the ES is ripping, Nasdaq's going to be ripping, and so is most of the time Russell. So you may not want to put on, you know, what I would do is, if you're saying I don't want to put on all three markets, well, then pick the two markets that have the biggest volume setups, right? So, for instance, like this setup in NQ wasn't very big. Remember, I was considering not putting it on because it was only 143. I said I like to see closer to 200, right? And I drew it for the webinar and I traded it. I probably still would have traded it on my own, but because the market's so dead. But my point is, if you see like 143 in here, but you see a long setup in ES where there's 1,500 icebergs, well then put on the ES instead, right? It's just a better trade. I mean, as far as the volume area, that's how you can kind of judge if you're juggling between three of them, you're getting signals in all three. Just use the ones with the biggest volume setups would be my suggestion. Does that answer what you were asking me, or did I not
Yeah,
answer
yeah.
that?
I mean, because like you're going over the risk management for each individual trade setup, but then we're talking more about account management.
Right. Yeah, and again, your account management is your zones. I mean, you got to be careful. Again, we talk about all the time. You should have a daily loss limit of, and that's what you have to consider if you're going to put on three markets, right? So you should be only be risking 5 to 6% of your entire trading account in a day. So if you've got three individual positions on and you're wrong on all three, that's going to knock you out of the day, right? If you're losing 2%, 1.5, 2% on the trade, which is that's what if you use the risk calculator, that's what you're risking. So if you're wrong on all three, you're done for the day. So you gotta decide, hey, do I like these trades this much, right? All right, so I'm probably stopped. Yeah, I'm stopped at a Nasdaq, which doesn't surprise me because of the.
RTY iceberg by RT, 150 contracts.
But the good thing is I was going to put on that Russell trade as well, and I would have been. Let's see, no, I'd still be in it, but it is moving back now. So I will consider, since nothing new has come in, so say for instance this comes up and retests this zone and fails, I'll put on a short in this because I'm trading this independently, right? This volume setup is independent. I'm not saying I won't short this because I'm long ES, right? I know they move pretty much in tandem, but this would be like a good hedge. I'm not hedging on purpose, but it's not a bad hedge, right? So if this hits here and turns around and these markets sell off, well, I'm gonna lose on my ES, but then I'll be short this, right? So, and I'm not putting it on to hedge my ES. I'm putting it on based on this setup, meaning I won't ignore the setup because I'm long ES.
One contract.
Let's see. All right, so this is an important spot gamma level here, where I may take off one if we can't push through this. right? This 4,600 is really important, a really important level. If we can get above it, then we're headed higher, but this may fail right here. So wheat's working great, and of course I didn't get it on my other two accounts, and that's why it's just free falling. That's upsetting. So anyway, the ATR in there was, what do we say? Because I gotta put my stop in, 5.12. Well, we got some time to put that in. I just want to see where we're at. I don't want to miss a exit level here. All right, so once again, the magical lugs. Doesn't get much better when you get a setup at a major lug. There you go. So I will be watching this as my first target, barring a new setup coming in. I'll try to hold this all the way down here. That would be a fantastic trade. I mean, that's another 21 cents from here, which is equivalent to 21 ES points, right? All right, so my stop's basically 4 cents above here, 80% of the 5.5. So 46.25. All right. Good old grains. So what I tell my room every day is you guys should be looking at multiple markets. So when your market sucks, which these markets, the equity markets have just sucked lately, terrible trade, you can move to another market. It doesn't matter what it could be this, it could be natural gas. You know, the volume is the volume. Volume is traders that are caught, or concentrated volume areas are what drives the market. So it doesn't matter what you're trading. Any of these futures markets, it's the same concept. All you need to know is the thresholds, right? And I go over all the thresholds in my course. I have all 22 or 23 markets in there. And then you need to know the ATR, and you trade them just like anything else. And you got your 5 or your six setups I do that I trade off of, and I trade them accordingly based on where we're at in the lugs. It doesn't matter what you're trading. So you need to have, I know some people that they don't have the bandwidth to watch, 10 markets. I mean, right now I watch like 14 markets or something, and I understand some people don't have that bandwidth, and that's fine. But you should have at least 3, probably 5 that you are monitoring. So when a volume setup comes in there and nothing's going on, you can trade that market, right? And wheats are number one. I mean, grains are probably the number one market you should be watching if you're just staring at ES all day, right? Because there's especially lately, there's something going on in these all the time. And these are some of my best products. Wheat and beans are some of my best trading products, right? It's all the same stuff. Let's see where we're at here. This is struggling at this. See that right at the spot gamma level. Should have probably taken one off there, but so the other thing you want to keep an eye on too, we've been talking about this a lot lately, is the relative volume. If you're getting crappy relative volume, you don't want to be participating in that market, right? So let's see what we're at. You can see this is crappy relative volume. So it would not surprise to see this bounce off that. Some CL stuff firing off. Wouldn't be surprised me to see it bounce off that spot gamma level. You need some big time trade to push through levels like that, right? And you can see, look at this, it's pathetic. We're okay to start, so this is the 100% line right here, just meaning normal trade. Again, this is a relative volume chart that's showing me the exact time of day, the volume coming through for this exact time of day for the last average on 30 days, last 30 days average, right? So you can see this thing's been like 50%. Right? So this, when you get volume like this, you get trade like that. When you get big volume coming in, and this is just one bar, but then that's when you get the bigger moves. But you're monitoring this and you start to see this thing dissipate. We talk about this all the time in here, all the time in my room, like right around 10 o'clock Central, 10 to 12 are my worst. Here, I hate going through this because it makes me very, very upset. We've talked about this multiple times. And I've known this literally for 23 years of my trading career. I used to leave my office when I was a big scalper at 10 o'clock and come back at like 12:30 because this is exactly what would happen to me. So this is so you can see here, let's just look at the total P&L. I haven't put in the last couple days, but so this is the total P&L over the last like 3 months, right? So 41,000, and then look how much I've lost in crappy, like that poor volume, because that's when the volume starts to really, really die down. And this is so at the 9 o'clock. So that this is 11 o'clock Central. 45,000 in losses, 26 in losses. So if I just what I did now, what I used to do is because I took millions of dollars of losses back then. That's why I finally forced myself to leave the office. It's just harder for me now. One, with my trade room. Two, I'm at home, so we're besides going to work out or hit golf balls, I'm basically you know at home. So it's like so I'm sitting here, and then sometimes I put on trades, and then if I just eliminated this, my P&L would be 3 times higher, right? So what this is telling you is this time of day is algo city, and you're just going to get whipsawed to death. So if you were smart, you would not trade between these times of day. This is actually 10 o'clock Central. It should be 10, and this is 11. And you can see once it picks back up, P&L goes up, right? So my point is, that time of day is bad, but this is also showing you, it shows you that time of day, but even though it's bad trade, it should still be getting to at least 100%. And this can't even get to 100% on these bars at this time of day. Again, this isn't. There's two different types of relative volume charts that are out there that I've seen. Right. So this one is thick or swim. You got to be very careful with this one. We've talked about this many times, but I just go over this stuff for the newer guys on here, guys and girls. So this is showing you the relative volume, but this is just a simple relative volume 60 moving average, meaning it's basing it off the last 60 bars. Well, of course, the relative volume is going to be spiked at the open, right? Because it's taking into consideration the overnight trade, right? So this is showing you just based on the recent stuff. The Sierra chart relative volume is showing you the relative volume for the exact time of day for the last 30 days, right? And you start seeing red or pink or whatever color this is, you want to be very, very wary of any kind of breakout moves. You're probably going to get chopped up to death. So that's the mini rant on that. So my point is, if this pops back up here, I may get out of one if it can't push through here just because the volume is so bad. All right, so now we got something in wheat. Now this is actually good because now I can trail my stop based on the new setup and or add. Actually, I already missed this one. You got this and this. So this one was 150. This one was like 160. Let's draw this on. I'm going to incorporate both of these. Both those icebergs. Don't remember icebergs, for you newer traders, is they're hidden orders in the order book, right? Because the big money can't just throw an order in the order book. Over here, I mean, you can see 300. If someone comes in, if a big money comes in and throws 300 in this bid, and look at the size in this order book. They put 300 here. What do you think the algos are going to do? They're going to run the market away. So that's why they have to hide their orders, right? But they're not really hidden if you have Bookmap. That's what's so important. You can actually see what they're trying to do. All right, so we got that zone drawn. Now I can trail my stop. Again, we're at 5.67 is the ATR. So basically 4.5 cents above here, I will stop out of this trade, right? So we got 29.50, so 30. So we're almost right there now. And, yeah, it'll suck. I'll make a little bit. I had a much bigger profit, but I stay in the trade until we hit important areas like Ludwig levels, etc., or I see an opposing volume setup. This is an opposing volume setup. This is turning into what potentially is going to be a bullish volume setup. So technically what I can do now here, if I do get stopped out of here, once this goes a full ATR, retest failure, I can flip and go long, right? I somehow didn't get stopped out there. You guys know my track record. 5 times a day I get stopped to the exact tick. So that's actually pretty shocking in itself. But so if this does hold on and comes back, I can, well, actually, I will short this, but I'll need to see full ATR retest here. Why? Because we're still above the yellow lug. I was short aggressively the first time above the yellow lug because we were at the red lug, right? But now you can see. So I was willing to take that short aggressively up here. Now we're getting another volume setup. We're still above the red lug, or the yellow lug. So I need to see full ATR retest to add to that short. Otherwise, I will get out. And you can see where this is bouncing. These are really important levels that you want to, that you know, if you have multiple positions on, you want to be getting out or potentially getting out, especially if they're confluent with something else. You can see this is negative. Here's VWAP. This is the daily value area. That's one standard deviation. Here's 1.5. Here's 2. You can see it touched 2. It actually started to curve down. And then you get these algos that start to rip it the other way, right? So, you know, you start getting in these areas and you have multiple positions on, and you say, you know what, I'm going to take off one here. Yeah, I have a nice, you know, that was a 15-cent profit or whatever it was. I'm going to get out of one and see what happens, right? There's nothing wrong with that. It's just where traders mess up is they catch this move and then they'll just trail their stop down in the middle of nowhere. It doesn't, you know, they're just because they're watching their P&L. If you're going to get out of a trade, get out at an important area, not because you don't want to give back your P&L, right? Because you're never going to get a big trade. You're never going to have the big trade, right? So I'm basing my stop not because I don't want to give back this P&L, it's because I saw a new volume setup. So that's where my stop goes. If I didn't see a new volume setup, I'd still hold this and, you know, can it come all the way back? Sure. It could have came all the way back and stopped me out, right? But that's trading. You've just got to accept that, and then you sit in your trade until it hits an important area, and or you get a volume setup, opposing volume setup, and that's what this potentially could be. If it moves lower again, I will wait for ATR retest failure, and I'll add to this trade, and my stop will go in the same exact spot where this stop is for my original short. Any questions on that, Bruce?
Let's see. No, we have some guys looking at some specific levels and some. Yeah. Ellie is asking about. So, what were the times again that you avoid trading in Central Time?
Yeah, 10 to 12, 12:30 Central,
Okay.
right around there. 12, it starts to pick up a little bit. So you got to remember, like the guys in New York, the big funds in New York, etc. They go on lunch. They go to lunch. They, you know, that's why it used to be just back then the algos weren't prevalent as much. They just started to become prevalent. That's what knocked me out of the game as a scalper.
Gold ice iceberg by GC 150 contracts.
But even though there weren't as many algos back then, it was still a time of day where it was completely manipulated. There was a guy that I used to trade against head to head all the time from Gelber, and he would just get in there and just start. I'm gonna get out of one here. He would just start flipping the market around back and forth, just like the algos do, right? Because he knew there was no big money in there to stop his gains. It's the same with the algos. Algos' worst enemy is the big money, right? And they, once that big money comes in, they can get run over. So many times they'll be, you know, I'm sure there's algos, I'm 100% sure that are watching the relative volume and they see spikes in the relative volume, they shut their algos off because they don't want to be messing around with the big money that will run them over, right? It's not a predictable type of trade for the algos. When the volume gets to this and this, that's a predictable type of trade for the algos, and that's when they take all the retail traders' money getting chopped up. I did a mentoring session yesterday. The guy was like, it was a little back over here, but it looked just like this. He's like, I didn't understand. We're at the yellow lug and we kept just bouncing back and forth, and I just kept getting chopped up. I'm like, well, look at this relative volume. That's why you're getting chopped up, because there's nothing going on. It's just the algos playing games with you. You guys, algos are at least 80% of the market, probably closer to 90% of the market. And how do you think they're able to function? By taking your money. That's how these firms run algos, because they take your money, right? So don't give them your money. When you see the markets starting to turn like this, stop trading. Go to another market. Look for bigger, you know, I know it's easier said than done, but you'll see once you really start watching this, you're going to see the majority of your losses are when it's, you know, that time period of the day, or when the volume starts to dissipate like this. You're going to notice that's when you take losses. That's how it is for me anyway. It's always been that way. You know, when you get the high relative volume coming in, then you get your bigger moves, right? Like this was yesterday, right? This is the sell-off we got in. Volume started to pick up a little bit, and then we had that. You had good volume, and you get big moves. When you have crappy volume, this was the area this guy was talking when I did the mentoring yesterday. This is where he was getting chopped up. Well, this is why I got chopped up, because this is just algos chopping all the retail traders up, taking their cash. Then when the big money started to come back in, then you get a big move. Keep an eye on this. Very important. I mean, you can come up with rules where you say, yeah, I only take Bookmap setups when I see the relative volume is at least 100% or at least 200% or 300%. You won't be trading that often, but I mean, are you here for action or are you here to make money and make a living as a trader? That's what you have to ask yourself, right? There's so many traders that just always, they want to try to catch every move in every market. Again, are you here for action or are you here to try to sustain yourself so you can work for yourself for the rest of your life instead of the man? That's what you have to ask yourself, right? So if you like answering to someone for the rest of your life, then get in here and try to trade every move and you'll be out of the business in no time. Then you can go back to working for somebody. You know, so it definitely takes discipline. Again, it's easier said than done, but you take enough losses, you'll learn the hard way. That's the point. Why do you need to learn the hard way when you're on these webinars with with me? I've been trading 20 plus years and I've gotten smoked. I've learned the lessons the hard way, right? Back then, there was no education. There was no online education. The markets had just come online. So there was nothing. It was me having to learn it on my own, good and bad, right? So the point of these webinars, the point of my trade room is for you guys to learn these. It's not even about the great trades. It's actually more about my mistakes and what I've done over the last 20 plus years, that you don't have to go through that pain. Right? So listen to me when I'm telling you this stuff because I've seen it and done it. But again, a lot of guys want to learn the hard way, so have fun. But you don't need to learn the hard way. If you follow the stuff I'm telling you and incorporate it into what you understand, you're going to be a profitable trader. All right, so I'm still hanging by a thread here for the stop autos. It'll be a profitable trade, but it was much, much, much better. I'll let this thing come back. Yikes. This came back 15 cents. Let's see if there was a reason I could have got out of that. Again, it's hard to watch all these markets when I'm on these webinars because I'm on one screen. I don't think there was anything here, but we'll see. I mean, so I won't get out of VWAP or standard deviation of VWAP unless it's confluent with something, right? So this was not down at the yellow lug, so I'm not mad about that, but I'm going to take a look at this market profile. So if this was a composite area, I'm going to be a little miffed. These aren't really nothing here. So this is an area, I mean, I don't take single days. I don't feel them as that important. They're important, right? Obviously, but you can see where did this stop. You had confluence here. -2 standard deviation, confluent with point of control from 2 days ago. Pretty close anyway, right? So that's an area where, again, you've got to come up with rules. So you can't just do it randomly. One time say, I'm going to get out here, and then another time say, no, I'm not going to get out here, right? Then it's just flip a coin then, right? Come up with rules. If you think this is important, if you like single day point of control, that's confluent with something else, put that in your trading rules and do it every single time. If you don't do it every time, you're not going to be consistent. That's not one of my rules. If this was a composite, I would have definitely, if I was watching this, and this was a composite, the shaded blue where it was multi-days, confluent with this, I definitely would have been out of at least one of them there. But it wasn't, and I didn't, and it just ripped back 18 cents in my face. And stopped out. But, good lesson. Or, again, guys, like these zones, this is how I trade these zones. I tell you guys every week, this is the science, this is the art, how I trade it. I've watched thousands of these setups over 3 years. This is how I've determined the best way to trade these setups. Yeah, does this suck that I got caught in that and didn't get out? Yeah, but over the long run, I know the way I trade them, for me, that's the best way to trade them. You can say, hey, I just caught a 30-cent move. The second you hear this ice come in, right, you just can pop out of the trade. You can say, I hear buy ice. You just heard the announcing dude, the computer, announcing that, right? As soon as you hear that buy ice coming in, you know you're at -2 standard deviation of VWAP, get out of some. You don't have to let it come all the way back on you, right? So my point is, this is an art on how you trade these zones. This is the science. There's no disputing there was big buy ice here, right? How you trade that, you can come up with your own version of what I do. I'm not saying everything that I do is perfect, obviously, right? And I'm always, even in my trade room, I'm going to get this out of here. Even in my trade room, guys are like, well, what about this? Have you ever done this? I've never, any time in any endeavor, I'm sure you guys have all heard this before. If you think you know it all, then that's the end of that endeavor for you, right? So it's like I'm always open to learning. Do you think like it took me 8 months to incorporate these Ludwig levels? I had a guy telling me who's made millions of dollars trading with these, not in a very short time period. He told me about these Ludwig levels for like 8 months. And I would not, I'm like, yeah. I just thought it was another indicator, right? And I'm not, I'm for as bare minimum as you can get on a chart is the better, right? Volume and some market profile stuff, I'm good, right? And he kept telling me about him. He's like, I'm killing it, blah blah blah, showing me his P&L, and I started watching him. I'm like, wow, that's interesting. Wow, that's interesting. And then when I saw it, 85 times bounce off the red and the blue and everything else, I'm like, okay, yeah, I'm gonna start looking at these. But my point is, I'm always open to learning new things, something that works. I'm fine with it, but I'm very, very cautious of, this is the first thing I've introduced basically ever, as far as indicators. So that, and I use one thing from the TAS products, the Edge, that we talk about too. But, you know, I don't take it with a grain of salt, adding new things to myself, but I am always open to hearing different versions of, that might make my trading better. So my point is, you should always be trying to learn ways to get better in trading. All right, that's my rant for today. Any questions, Bruce?
No, happy to have you back, and love the rants. It's always refreshing. No questions here. Let's see in YouTube. I don't think. No, I think we're all kind of caught up on. Yeah, yeah, we're looking good.
Okay. The CS is not looking good. I have a feeling this is going to come back and stop me out. You can see now you start seeing all these light up, then the move's going to be real and we're coming back. And once again, there's no volume in here. We just looked at the relative volume. That's why I even got out of one at this important spot gamma level. If you don't have the energy, aka big money coming in to push this through, the algos just send it right back. And that's what you're seeing right here. Just sucks I got stopped on my NQ trade. At least I'd be short that. Actually, I forgot to look at Russell. Let me guess. Hey, look at that. Perfect retest failure. So what did I say? I would short this, and I will. ATR is 43.7. 43.7. 20% of it, 80% of an ATR is 34.96. So 35 ticks below here, I will short this. So we're at 88. That puts me at 53. So I should already be short, but I'm getting an opportunity here to get in. So I will short it right there. 1 second. All right, so I'll fill it there. And then my stop goes 35 ticks above here. We were at 10, so 45. And it's not coincidence. This is where this came back. Oh, wait a second. I didn't even see this. I didn't even hear that fire off. Hold on. I might not even be in this trade. What's this? Yikes. All right, so that I didn't even hear this fire off. So let's draw this zone quickly. I might be out of this trade immediately. I need to change the colors too, or else I get confused on the areas based on that other black zone. All right, so you got that. I'm going to hop out of this right now just so I can reassess what's going on here, what I should be doing. Because I got to look at the lugs and everything. All right. I can't remember what we saw in Russell. All right. So below the yellow lug, right? I could be in aggressively here. but this is a new setup. So I was entering, because I didn't see this new one, I was entering on this retest failure. But this is the newest setup, so now I'll still go in aggressive, but it's got to be 35 ticks below this zone. All right, so I'll just give it a little more room. That puts me in 02. All right. So locked and loaded there. One good thing about this, it took a smacking, but didn't get stopped to the tick. That's how ridiculous my stop outs are. Like, I'm happy, I'm fine with the loss, but what I'm happy about is that I didn't get stopped out to the exact tick, and I had to do that, because that literally drives me crazy, as you guys all know if you've been on my prior webinars, because it happens about 10 times a day. All right, so still have this on. If this starts selling off, I'll be probably stopped, but I'll be short Russell. All right, so now this trade, or this market, this is wheat. I got stopped out of that short, made a small profit. Now, if this retest fails, I'll go long. Right? Actually, take that back. I should have been in. I should be long there aggressively, right? Because I think we're still above the getting these markets confused. Yeah. So I should have stopped out here and entered long. Right? I missed it. This is just no excuse for this. So again, because the way I trade these zones aggressively. For above the yellow lug, I get in long aggressively. So I should have stopped out of my short, and I should have been long there, and I'd already have 7 cents on my pocket. So that's upsetting. Missed that one. Mistake after mistake. I just lost track of where we were at the lugs. That was all that was. So I should have been. I was waiting, because you remember when I was talking about this earlier, I said I'll get out and I'll wait for retest failure, but I don't need retest failure because we're above the yellow lug. So I should have stopped out and gone long in the same area. So that was just a mistake. All right, let's watch this. Got something new happening in gold here too. So you're 155, and then you have another 18. So in this area right here, you can see this is one house on the icebergs on chart. When you see a line like that, it's just one house. So let's get this zone drawn, and I can at least trail my stop on this. All right, so that's that buy ice, right? Someone's still coming in here. It's nothing to write home about, but it's all part of this zone, right? So now what I can do on this long, that's done absolutely nothing. 23.2 is the 5-minute ATR. So 18.56, so 18 3/4, because I round up. I can trail the stop now, so 30, 31.75. Is that right? Bottom of the zone was 50. What did I say? So that's 20. Yeah, 32, 31 3/4. So there's no quarters in this, so 32. So you see now I just saved myself 30 ticks potentially of loss because of the new setup. So that's number one. Now I can potentially add, and I can't remember where we are on the lugs. We're above the yellow lug, so I can add to this trade. I am very careful of, or cognizant, I should say, of adding to trades. Like if we're right here, is it worth adding to a long into the red lug? You got to be very careful. Am I going to risk like 60 ticks to make 30? No, but this is far enough from the red lug where I could add to this long and then get out of some at the red lug, if not all of them. I usually get out of all of them and then just reassess. So 19 ticks above here. It's 93, 92. Well, I'll add to that trade there. That is still pretty close to the red lug, but yeah, that's risking. It's only 30 ticks away from there. But this has been in this area for a long time, and we got new ice. I think you're going to get some rips if this moves a little higher. So stop runs. So I will add to this if this comes up here, and then my stop goes in the same spot as where I just trailed for this long AM on already. That's that. All right. Did not get filled in Russell yet. God, these markets are terrible. Nothing going on. So this is a good example, right? I will not take a long off of this zone. First of all, this zone, I probably shouldn't even have traded off it because it wasn't even 150, but whatever I did. My point is, this is what I was telling you guys earlier, right? So this had gone an ATR below here, right? That was why I shorted it. And then we went an ATR above. So once this proves itself as a short setup, I will not take a long setup off of it, right? I need to see something new, especially when it was nothing. It was 140. So meaning if we retest here and fail, I wouldn't go long because this has been already nullified by the ATR below move. So I just need to see something new there to put a trade on there. And of course we're in 1020 central, so this is where I'm supposed to be getting up and leaving. So I don't continue to crush my P&L at this time of day. All right, here's a short Russell. All right. So again, ATR is 42.4. Ticks above here. So that's 95, 99. That's where I'll stop that trade. So here's a good example too, right? So you see where I would stop this trade to right in the middle of this zone. So I'm willing to risk another 10 ticks to get it out of that zone because I don't want to see one of these like I did the first time. And like here's a per example. If that stop would have been in this instance, I would have been stopped out basically the tick right in the middle of the zone. So I put it a little bit above there. So I'm risking a little more than normal just to get it out of this zone. So then what I'll look for is, we're at baby lug right now. You see this light blue lug. But I obviously just put the trade on, so I'm hoping it can pierce through there, and then I'll be watching basically this blue lug. Again, you can watch standard deviation if you want. You can see bounce, bounce. And also you want to watch that day, what is holding, what's not. This has already shown you twice -2 standard deviation. The algos have ripped it back both times. So if we come down here again, it'd probably behoove you, if you have multiple positions or multiple contracts on, to get out at least one there because you don't want that. Again, it's what's going on that day and see how it works. You can see this one got to about 3, but this one, +2 rejection, -2 rejection. That's all algos. That's all it is. It's reversion in the mean algo. See that? See that? So my point is that this comes down here again, I'm probably going to get out of 1 just because it's worked, because it's showing today that's what's going on. You could change that if say we start ripping down and you're watching a relative volume and you see it's like going up to 2-3 times. Well, it's probably going to run right through that reversion algo, right? And then I'll get it run over, and then you want to watch your blue lug. So hopefully that makes sense. All right, Bruce. There's not a lot going on here, so if there's not any other questions, I'm probably gonna hop off.
Yeah, a few more questions here. Okay, yeah. I mean, you answered the one about the trading zones. Yeah. And Sam is asking about the important question: how was Vegas last week?
I lost a little bit. I didn't really. Don't get on my Clark County stories, but I'm banned from like 20 years ago from playing blackjack in Vegas. I played much bigger back then, as you can imagine. But I mean, I can play in some of the casinos now and not get bothered because my play is so much smaller. But I just one of the first places. So that the whole story, I'll tell the quick story. It's actually a really funny story. So um, I actually am well profitable over casinos in my lifetime. So back in the day when I was at my trading firm, I just started. Did I ever tell this story on here, Bruce? Did I ever tell
I
my
don't
blackjack story?
I don't think so.
All right, so well, there's so much going on, so I don't know if I want to interrupt the trading. I'm just kidding. So back in the day, I just started making money, and there was a guy in my trading firm. He was the number one trader. His name was the Big Cheese, right? And back up. So I had gone every time I go to Vegas with my buddies, I'd get killed. Every time I'd lose my money. The one time I lost all my money very first day, right? So go on this trip. I think it was the next trip after that when I lost all my money the very first day. Again, this is before I was even making money trading, right? And so I just started trading with this guy or with the trading firm, and I went to Vegas with one of my friends who actually got me into the trading firm. So we're in Vegas, of course. Within 2-3 days, I'm out of money, and literally having to borrow money to do anything, right? So we're coming home to Chicago. We're in the Vegas airport, and I seriously do not have $1 in my pocket, not $1. And I see this book in the bookstore. My buddy's like, I want to get a book for the plane ride. So we go in the bookstore. I see this book. It's got boxing gloves on the front of it. It's called Knockout the Casino, like a joke. I start flipping through it, and it's about card counting. I'm like,
Stop by CO, 150 contracts.
I'm not even looking at crude. The thing is nuts. It's impossible to trade with that line, so I'm not even bothering with that right now. So the the book's about card counting, and I start thumbing through it. I'm like, I need this book. I cannot. I'm not coming back to the city unless I have some kind of edge. I'm so sick of losing my money. So I go up to my buddy. I'm like, throw the book. He's at the counter. I'm like, I throw the book on the counter. It was like $13. I'm like, could you buy this for me? I'll pay you back when we get home. I didn't have $1 in my pocket. He's like, no, I'm not buying that book for you. I'm like, dude, just buy me the book. I'll give you $13 when we get home. So I have to fight with him to buy me a $13 book. Buys me the book. I come home. I read it. And then back then in Chicago, they just had the riverboat. They called them the riverboats. That's the only way they can have casinos. There were no land casinos, and they were on the Indiana-Illinois border. So I read the book, and the thing about card counting is, yeah, it's not hard to figure out +1, -1. But what is hard is, one, you have to play the correct strategy, right? You can't screw up how you play your hands. Two, you got to deal with the other morons at the table. Three, you got to deal with the waitress, the pit boss, dealer talking to you. Like, it's all that encompassed in one, right? So it's way more than just counting cards. So I had to go practice. So I would go to these boats. I play the $5, $10 minimum, and I'd count cards, and I'd do it, and I started making money. Like every time I went, and it wasn't big money. It was like $400, $500, $1,000. But that's pretty good when your minimum bet's $10, right? So fast forward, this was months and months and months I was doing it. Then I finally started making money trading, and I'm walking out. It was like a slow summer day, which just reminds me of, by the way, this crappy trade. And the Big Cheese was walking out of the office. I was walking in after lunch, and he's like, "Hey, what are you doing?" And I'm like, I didn't really even know the guy that well. And I'm like, nothing. He's like, these markets suck, don't they? I'm like, sure do. And he's like, hey, you know how to count cards, right? I heard you know how to count cards. I'm like, yeah. I said, I've been doing it very small, but it works. I go, if it works, with the amount I'm playing, it works with any amount, but I just haven't done it at a larger scale. And he's like, let's go to the boat. I'm like, all right, because there's nothing going on. I'm like, fine, let's go. He's like, how much should we bring each? And I had just started making money then, trading, and I knew it worked. And I'm like, I don't know. He's like, let's bring 10 grand each. I'm like, okay. So we stopped on the way there, stopped at a restaurant. We came up with our strategy based on the circle where I put my chips. So I was the stiff, the deadbeat. This was a perfect storm, because this guy was a loose cannon gambler as it was. He always would go to the boat. So the other problem with card counting is the minute you start making money, they think you're counting cards and they kick you out of the casino, right? That's why I'm banned from casinos, but I'm getting ahead of myself. So this guy, he's just the perfect guy for this, because he's a loose cannon, just bets haphazardly, right? So he's not going to bring attention to himself. So we go there, we come up with the system on where I put my chip in the circle, because you want to do increments in your betting, right? So you always want to be betting a flat bet, the table minimum, if the count's not in your favor. When the count's in your favor, then you up it. So we had from 1 times your bet, if I have my chip right in the middle of the circle, to If I put it at 12 o'clock, it was 2 times, 3 o'clock was 3 times, 6 o'clock 4 times, all the way to 10 times the bet. I would put 2 chips and then 6, 7, 8, 9, 10. So wherever I had my chip and the number of chips I had in the middle between 1 and 2 would signal to him how much to bet, right? I was betting flat hands not to draw attention to myself. So I was just betting $100 flat hands. He was betting from 200 to 2,000, right? So if the count got to a positive, maximum positive count for the deck, it would be 10 times his bet. So he'd have 2,000 and he was playing 2 hands. So he'd have $4,000 out there. So we go the very first day and we win. And it was perfect. Again, he was a loose cannon, just an idiot, not even looking like really looking at the cards. There was no way they suspected anything. First day, we won $91,000. So shockingly, he wants to go back the next day. I don't know why he would want to do that, right? So we go back the next day. Very next day, same casino. I think it was the same table actually. Same two guys. Like they had to have known something, but whatever. Go back the next day, $112,000. So in 2 days, we made $200,000 from the Horseshoe Casino in Indiana. It was when it was in the, it's now the Harrah's, I think, but it was when it was Minion's Horseshoe. So then we got, we thought we're getting wise. We're like, well, we can't keep going to the same casino, so let's split up. So we started making our rounds to the other casinos. Back then it was like Majestic Star was one, Trump was one. So we started going there, going around, so we didn't get caught. I'm doing air quotes, by the way. So the one day we're sitting at Harrah's, it was when it was this really tiny one, and we're doing the same gig, right? I'm playing flat hands, and he's the high roller, and the pit boss comes up to me, right? I'm supposed to be the stiff that doesn't, and we don't know each other too, supposedly, right? Comes up to me, he's like, "You can't play blackjack here anymore." I'm like, "What do you?" He pulls me off the table. He's like, "You can't play blackjack here anymore." I'm like, "What are you talking about?" He's like, and I was down money too. I was on like $600 or something, playing $100 a hand. I'm like, "What are you talking about?" Just playing dumb. He's like, "You can't play blackjack here." And I was adamant. I'm like, "What are you talking about?" He's like, "Listen, his exact quote, "You're welcome to play the other carnival games here. You cannot play blackjack." So then I get up and leave. I grab my chips and leave. And he points at my buddy. He's like, "Yeah, you're out too," because he knew the game, right? So then right after that, I go to Vegas, literally like a month after, and Mirage, which I just stayed at, is why I wasn't playing blackjack. That's why this whole story started. Mirage, they come up to me. I'm down like 3 grand, right? I just gotten there. Guy comes up to me, "Can't play blackjack anymore." Like, what? Why? Like, what are you talking? You got to play dumb. He's like, he was adamant about it. I'm like, "I'm down 3 grand. What are you?" He said his exact words there. "Your play's too strong for us." I said, "My play's too strong for you. I'm down $3,000. What are you talking about?" Again, play dumb. And he's like, "Sir, you can't play blackjack." So I picked up my chips, left there. Go immediately to the Hard Rock, sit down. I'm there for 10 minutes, down $700 there. Come up to me. Hard Rock told me, "If you ever set foot in this casino again, you'll be arrested." So they can kick you out. If they don't like the color of your shirt, because it's a private establishment, they can kick you out of the casino. So they said, "You're kicked out. If you come back, you'll be arrested." So then after that, my name was in the computer system, and I couldn't play blackjack anywhere. Fast forward to today, I can play because I'm not playing anywhere near as big, but I'm still in the system, and I didn't want to, like, I had my family there. I don't feel like getting kicked out of the Mirage while my room is there, so I didn't play blackjack basically on the trip. So that was a long answer too. I lost a little bit and didn't play much blackjack. So hopefully you guys enjoy that story.
That's crazy. I mean, that quickly they know you're on a
Oh
list.
yeah, they put it in the system, and this is before facial recognition too, I think. But it was in the system, and it was over. Like, just could not play ever again. Not for size anyway. Right.
Yeah, yeah, yeah. Wow, that's that's kind of scary. Anyway, yeah, yeah. So sounds like you had a good time, and we're happy to have you back.
Thank you.
Uh,
Appreciate it. And again, if there's no other questions, hopefully you guys enjoyed that story. I am officially positive against the casinos in my lifetime. Not many people can say that, but I am. And buy the book. It's called. You can get it on Amazon right now. It's called "Knock Out the Casino." It's a system, a card counting system, and it works. It definitely works.
wow, wow. Yeah, I'll pass on it, but thanks, Scott.
Well, but the thing is, if you do end up going, you will eventually, right? You'll be in Vegas at some point or at a casino somewhere. You at least want to be armed and be able to hold your own, right? Instead of just handing them your money. And what's so funny is you get kicked out because all you're really doing is turning the odds against them. You're not doing anything illegal by counting cards, but they won't have it because you have an edge on them, which is hysterical because the whole reason casinos are in existence is because they have an edge on the player, right? So it's like once you turn the tables on them, it's, oh no, you're out of here. It's a big joke, right? But they
Yeah,
can do whatever they want because it's their, it's a private establishment.
yeah, yeah.
So quickly, I got filled on. What were we saying? I'm sorry.
Go ahead.
I got filled on this ad to this gold, so stop goes in the same spot, and we'll see if we can get this thing to rip. And then other than that, just coming back now, which I thought, again, really good lesson though. Volume was terrible. We had an important level, couldn't get through it. That's even why I got on one. I kind of expected this, right? So you can come up with rules. You say the volume dissipates at an important level. I get out of all of them. So I'm short on that. And then, I mean, I'm probably going to get stopped out of that long, but I'm short Russell. And that's moving in my favor. So, and there's my stop there. So that's it. Horrible trading day. It's been really bad lately. So, it is what it is. You have multiple markets you watch, and if they all suck, get up and, you don't have to trade every day. You don't have to trade every move. If you feel like you do, you're going to have a very hard time making it in this business.
All right. Well, yeah. I think good session. Lots of thanks coming in. Yeah, thanks, Scott, and we'll have a good weekend, and we'll catch up with you next Thursday.
Definitely appreciate it. I'll see you guys next week.
Okay, thanks, Scott.